mind blow. Over the next sort of 5 to 10 years, we could see $10 million a coin. I look at this as probably the biggest opportunity I've seen in the 10 years that I've been in Bitcoin. That's the thing that sends Bitcoin to the moon and never comes back. Live off your Bitcoin forever without having to sell your Bitcoin. I'd say none of us have enough Bitcoin, particularly with what's coming. So Michael Saylor and Strategy, I believe, is going to be the catalyst for the absolute digital scarcity meets an infinite demand. There is only one thing that can happen. And then we will have that one instance where we wake up with, a God candle, a mega candle. We'll see somewhere between a 3 to a 10x over the next.
Mr. Peter Dunworth, you are a calming voice and a bold voice in this space. And we were just talking offline about some of the ETF flows that are going on in Bitcoin, lending companies popping up. We're seeing Bitcoin treasury companies popping up or lending on top of the Bitcoin treasury companies. We have all kinds of craziness. Some massive companies doing massive things with Saylor and Nakamoto and Jack Mallers. And so, we'll touch on price later and what's happening with that. And you were talking about alt season being over and just kind of speculation that's coming into this space. So I'd love for you to start unpacking where we are with all this.
I think we've never been at a better moment in Bitcoin's history from an adoption perspective, from a sentiment perspective. I think what's ironic is from a performance perspective, Bitcoin's been a little disappointing. And let's probably start with the biggest man in the room, which is Saylor. I look at the work he's doing, and I think on a share basis, like a price basis, some shareholders have been disappointed with the performance because his stock has been flat for 6 or 7 months now. It did peak in 540. It's currently sitting at 380, and it feels like it's spent an eternity, or it's in limbo, sitting at 380, and doesn't matter what he does, how much more Bitcoin he adds to the balance sheet. He sits, the share price sits at $380. But I look at this and think he's forging new ground that no one is there yet. You've got all of these competitors who are hot on the heels, who are the great new thing, and all the companies are fantastic and phenomenal and really exciting. But you've got one basically Papa Bear in this whole industry who is forging new ground, who has to create new things. And I look at this and I think, I like to apply 2 things to what's happening right now. And I think we're seeing Zeno's paradox play out with these Bitcoin treasury companies. And what Zeno's paradox is basically you start a meter away from the wall, and every step you take forward, you get 50% closer. But after 1,000 steps, you're that far away from the wall, but you still haven't touched the wall. And I look at this and I think Michael Saylor he's that far away from the wall. He's a millimeter away from the wall. And so all of these other companies, these Bitcoin treasury companies that are coming to market, it looks like they're making huge gains on Saylor. And, Metaplanet, who we love, Dylan, absolutely a savant. He and Simon are just brilliant, as well as the other Bitcoin treasury companies. But these companies are starting from zero or a meter away from the wall. And so when they take their first step, they're moving half a yard. Whereas when Saylor moves 50% to the wall, he's only moving a millimeter. And so I look at this and think, this is basically the law of exponential, or the problem with exponentials is that they eventually curve out to nothing. It's like an asymptotic curve that will eventually top out. Saylor's just a lot further down there. But what I see playing out at the moment, which is really interesting, and this is, I think, the second act for Saylor. The first act was getting on board the equities market. Now, he is less than a month away, I think, from getting inclusion in the S&P 500. That is going to unlock a whole host of passive flows. I've seen somewhere between $25 billion to $100 billion of passive flows are going to flow into that purchase of that share. That will give that a huge bump up. That should have value accretion. And if that looks like it's going to happen, he will have a whole host of investors front running that. But what no one's really talking about is the second act. What he's setting up is the debt market. And all of those instruments, Strife, Strike, Stride, all of those things that he's basically created, and that we're starting to see some sort of little drops come through in the form of Bitcoin accretion. This is his second act. So Saylor has basically gone through the first S-curve of the equity markets. Every other Bitcoin treasury company is following the same path. And much like Bitcoiners who basically go down the rabbit hole, anyone who's deep down the rabbit hole, like a fisherman sees a fisherman from afar, all Bitcoiners who have gone down that rabbit hole know exactly where we are in that Bitcoin journey by having a brief conversation with someone. These Bitcoin treasury companies are following the exact same path down the equity markets that their local equity markets, Japan, UK, Europe, whatever it might be. And they're copying Saylor's playbook, who has been just absolutely benevolent with giving all of his information away so that other people can follow it. Now, what's interesting is Saylor's gone through the equity market S-curve, and now he's building out the second act, which is the debt market S-curve. And this product that he's building is going to be the flywheel that creates what we're going to see. And what's really interesting to me is you've got the oil market basically gets the price of oil globally gets dictated by the Saudis and OPEC. They're basically the marginal producer which sets the global price of oil. What Saylor's building out, I believe, is with these debt markets is he's going to be the marginal purchaser of Bitcoin, and he's going to set the global price of Bitcoin because he's going to harness the debt markets, convert that into the amount of Bitcoin that's going to be purchased on the day. So what he's building out is just a masterpiece. But for the last 6 months, investors have been sleeping on it, probably disappointed with the share price, but I think we're going to see something very special come to fruition in the next sort of 3 to 6 months.
Do you think that there are what other tools or I guess products, like what else is up his sleeve? Do you think when, like you said, you were referring to this second act that's coming? What other things? I guess I don't know any other way to say it other than just what else does he have up his sleeve in that sense? And like I'd love for you to extrapolate more on him really kind of setting the market. Like, will he ever be big enough to really kind of be setting that market and really affecting obviously the price made at the margin? So I would love for you to kind of touch on that more, of how he really could be swinging or kind of affecting what's happening at the margins for the price of Bitcoin itself.
I think he will. And I think we saw Metaplanet announce that they reached 10,000 Bitcoin on the balance sheet, and everyone's cheering, and I'm fully supportive of the Metaplanet team. I love that company. I've invested money in it. I think they're brilliant. But Saylor comes out within 12 hours of that announcement and announces he's bought more than that entire company holds in a single day. So, I mean, we just need to look at relativity here. What Metaplanet's done is unbelievable. They're on trajectory to achieve what MicroStrategy has done faster, but they're going to come up to the law of diminishing returns, where as they approach what Saylor's achieved, it's going to get harder and harder and harder for them to achieve it. And this is where I look at this and think the debt markets are the unlock that we need. And Saylor is going to get help from all of these companies globally. These Bitcoin treasury companies are actually a help, not a hindrance to him, because what they're providing is they're liquidity sinks for Bitcoin. They're going to be stores of Bitcoin for long term that can never sell their Bitcoin. If they want to be successful Bitcoin treasury companies, they cannot sell their Bitcoin. And so all of a sudden you've got 600,000 coins with MicroStrategy or strategy. You're going to have probably 200,000 to 500,000 coins with Metaplanet. You'll have the Smart Web company or whoever the UK anointed one is, they'll have 500,000. All of a sudden there's 70 stock markets globally. They'll all have their anointed one, and then they're going to have their Pepsi, runner-up, who is the competitor to the big one. And all of a sudden you've got 70 equity markets that are all sucking in Bitcoin, and they're liquidity tanks for Bitcoin that will never see that Bitcoin on the market again. They're not going to be selling. You'll be selling stock, but they're not going to be selling your Bitcoin. They're going to hold it. So I look at this and think this is actually the catalyst for some of the things that we've talked about previously, that really is like the foundations for an exponential growth in Bitcoin. And I look at what's happening with all of these liquidity sinks in Bitcoin. The Bitcoin treasury companies are a benefit to Bitcoin, not a hindrance to it. And I look at it much the way bamboo grows. I'm not sure if you're familiar how that stuff works.
A little bit. Not too familiar, though.
What's really odd about bamboo is it takes a long time for this to incubate. It might take up to 2 years, give or take. Some botanist out there will tell me what the actual numbers are, but relative. It takes 2 years to incubate, and it might grow a foot in 2 years. And then in the space of 6 months, it will grow 10 feet. And I look at that, I think, this is what we're seeing now. These Bitcoin treasury companies are liquidity sinks that are going to take in and absorb all the available Bitcoin. When that runs out, because we're coming up against absolute digital scarcity, when that runs out, we then see the price shoot vertical over a very short period of time, because we know these people aren't selling. Everyone who has sold will sell, And the most important thing is they're not going to be selling. And most importantly, you're going to have liquidity providers, loan products, and the rest of it that will enable you not to sell your Bitcoin, so no one will have to sell it. So you'll then be reliant on what is the available Bitcoin minted on the date of purchase. And that's going to be, I guess, a severe competition from all of the Bitcoin treasury companies and all of the long-term hodlers and dollar cost averages out there with Bitcoin.
So we touched on, we mentioned the, alt season, we saw like the ICOs in 2017, then we saw the NFTs in 2020-ish, and then we had the meme coin season that came and went, like all those alt cycles, I guess we'll call them, like just are exponentially shorter and shorter. And that's what the meme season was. I don't even know, a couple months or whatever it was, and a lot of that, again, it kind of looks like it ran right up into the MicroStrategy trade, which was based in the end of last year, right? Like the meme season was there, and then it was gone. And then all of a sudden here we are into, strategy and all these treasury companies. Is that just, are we going to see more alts popping up over time? So when you say, hey, we're done with this and the speculation is over here in these treasury companies, I'd love for you to unpack that, and just how does that going to affect? I mean, that's obviously, it's got to be a great boon for Bitcoiners, people who hold Bitcoin, people who like sound money, like all that attention and energy and capital is now coming to this space. It looks like it, feels like it, smells like it, quacks like it. So it must be, right?
I couldn't agree more. And this is where I'm so glad I don't hold any altcoins whatsoever, because I would be so disappointed and scared that the alt season is not coming. And probably the greatest addition that we've seen that alt season is questionable is a diehard, not anti-Bitcoiner, but a diehard altcoiner in Charles Hoskinson, inventor of Cardano, has basically capitulated and said, right, we're going to use the Cardano treasury to go and buy Bitcoin. Wow. Now, what's really interesting is you've got the Ethereum Foundation. You know what their number one treasury asset is, or number two treasury asset is Bitcoin. They've sold Ethereum to buy Bitcoin. Cardano, their treasury, they've sold Cardano to buy Bitcoin. I look at this and think,
it's incredible.
Retail doesn't want to speculate on tokens anymore. We've basically bought the meme coin speculation to listed assets, securities online. I think Dave Bailey was probably first to admit this. Now, whether we like it or not, there is a much safer environment for speculating on this. And the speculation around Bitcoin treasuries is very unique, because out of all my time looking at markets, this reminds me the most of the .com bubble. So all of a sudden, and let me just sort of clarify this, because what I think you get with these Bitcoin treasury companies is you get the ability to have the ultimate speculative bet on, say, an internet stock, where you've got all that run up. It's like being able to buy internet stocks in 97, 98. And you've got a full 2 years of it to run up and just go absolutely way past fair value. But on the downside of that is you've got a put in that they're buying Bitcoin, which means in fiat terms, you're always going to be okay. If they just hold that Bitcoin, the price of Bitcoin will appreciate through time, and you get to have a speculative bet on these Bitcoin treasury companies with a long duration put that lasts forever because they're buying Bitcoin. So in fiat terms, if you buy at the absolute peak and it crashes, you just need to hold that long enough for the price of Bitcoin to make you good on it. So I look at this and think this is actually an extremely good investment vehicle, because the underlying asset that these Bitcoin treasury companies are buying is rock solid. And so I look at that versus the meme coins, altcoins, everything else that you can buy, and I think I wouldn't be touching that at all, because I don't get any downside protection in those investments. And it's not on a platform that I'm familiar with. And you've got, I don't know, $400 to $500 trillion worth of capital that can go into these Bitcoin treasury companies, but it's a real effort to get to the meme coins and altcoins. So I look at this and think, I don't know how you're holding altcoins thinking that we're going to have this banana zone. But look, I could be completely wrong on that.
Yeah, all Raul Paul, you're right. The banana zone. What is that? When you look at, I mean, everyone synthesizes everything down to like global liquidity, M2, something to that effect, I guess we'll call it. I mean, when you're looking at stuff, I mean, what do you believe, or what is your opinion on M2 just being the driver of it? Are you looking at a bunch of other things? Matt Hogan, I was talking to him the other day, and he was just like, he had 8 different points. I mean, I think there was even more, right? But he was like, I just look at it as a ball, and there's all these strings that are kind of pulling. The ball's in the middle with all these strings coming off, and that's the price in the middle, and all these factors are, so he had a much more nuanced approach to it. But then you get some people are just like, nope, it's just global liquidity. It's just M2. It's just the more currency in circulation, the more. So like, where are you? Are you somewhere in between there? Are you more towards one end or the other of the spectrum when you're kind of looking at just the overall, total market cap of Bitcoin?
I'd probably go one step beyond the global liquidity. And I think in a world that is starved of trust, you want to have an asset that you can trust. And this is where, beyond global liquidity, beyond 8 different macro factors that we can look at on a day-to-day basis, I want to look at what's an asset that I can hold for the next 10, 50, 100 years. What is the most thing I'm certain of? And if I look at all the investment options that we have out there, all of the economic indicators, firstly, I don't trust any of those economic indicators, even the global liquidity. I think they does a good job, but they can muck around with those numbers. But they've intentionally, well, that's a harsh word, but they have, whether they've intended to or not, they've deceived us when it comes to the unemployment numbers. They have revisions 6 months after the fact. The CPI numbers, the inflation figures, I can't trust them because we have revisions after the fact as well. And then they constantly change how that's monitored. The unemployment numbers, they have a 6-monthly revision after the fact to tell you that we found 1 million people more unemployed than we previously thought.
Yeah.
So they're the 3 big factors. And then the GDP figure, they tell us that a negative quarter, 2 negative quarters is not considered a recession. So these people are really flimsy with terms. And I look at this and think all of our financial data has now been politicized to achieve a political outcome. That's something I don't want to invest money in because I don't trust it. If you look at and then peel back the layers and you look at the investment thesis for property in Western countries, it's really hard to find properties that are investable in the US, the UK, Australia, because the returns just aren't there. And we've got an overinflated price of these properties because they've been financialized. So there's this huge gap in what they actually worth versus what they sell for. And I look at that and think, I don't want my money or my client's money exposed to that level of risk. Same with the stock market. The stock market's trading at all-time highs. Coca-Cola, this is the craziest example I've ever heard of. Warren Buffett was buying Coca-Cola on a 6 times price earnings ratio back in the 80s. During COVID, that thing was trading at a 30 times multiple, while at the same time, Facebook was trading at a 15 times multiple. I'm like, how on earth is Coca-Cola, which has been around forever, selling sugary water? How is that trading at a price earnings ratio twice of Facebook? You're telling me the growth outlook for Coca-Cola is better than Facebook? It was upside down world. So I look at this and think, before we look at all of those factors, which basically give us an indication about Bitcoin, what's the thing I'm most sure of? Other than the sun coming up tomorrow, the Bitcoin network working and producing a block every 10 minutes is the thing I'm most sure of. And that's where I want my money. I want surety of my money. I want return of capital, not return on capital. And if I buy Bitcoin, I get that peace of mind.
Are you concerned at all about the number of treasury companies coming in? So coming back to that for a second, and what the cycle might look like in a year or two from now, or say we start, all the buyers have been exhausted, and we start heading back the other direction, and we have a good pullback or whatever it is. Are you concerned about the number of companies that are in now, or maybe again a year from now, if things are ripping, then and a lot more people have jumped in? Does that concern you when you kind of look out on the horizon there with companies that could blow up potentially?
Not one bit. And the reason being is there's a behemoth in the room called Strategy who would love the opportunity to soak up all of that liquidity. In one day, they bought more Bitcoin than Metaplanet has purchased in the last 12 or 18 months. And once they unlock that debt market, they'll be able to soak up everything that comes to market. And this is why Michael Saylor and Strategy being that marginal purchaser, setting the marginal price of Bitcoin, is really valuable, because with those debt markets and the unlock with all of those debt instruments that he's achieved, that I believe is going to be the catalyst for the escape velocity of the Bitcoin price. Now, a lot of people don't understand that yet, but that is the catalyst for escape velocity. That's the thing that sends Bitcoin to the moon and never comes back. because Michael Saylor, I think, is one of the most trusted Bitcoiners. We know exactly what he's going to do with it. We know how he's going to do it, when he's going to do it, because he tells you. And then the second, or one of the fastest growing in the market is Metaplanet, and they tell you exactly what they're going to do too. So at some point in time, absolute scarcity is going to get that unlimited demand. And then that's going to set the price. And that is, I believe, the thing that's going to push us to the next price level.
Yeah, I would love for you to touch on this, because I want to come back to the this escape velocity, really. So in a little bit we'll talk about on price and the effects that that's going to have and where we might end up and what the average person can do. But for right now, I want to touch on, while we're on some of these treasury companies and stuff like that, how is lending? So now we have lending. We talked about this offline a little bit. How is lending going to affect sell pressure as more and more people are offering services to lend, whether it's Jack Mallers or things that seemingly everyone's working on now, these different places? Because just we know that as the number of Bitcoiners grow each epoch, this epoch is going to be very big, but it's going to be extremely big the next cycle when you have that many more people in Bitcoin that own Bitcoin, that their wealth is grown exponentially, whatever it is, and their purchasing power has grown. They're going to want to unlock that. They're going to want to do something with that. So I would love for you to touch on just lending in Bitcoin and what's happening there, and your thoughts on that. Again, how it might reduce sell pressure going forward, and what we're looking at.
I think it's a big point, and to a lot of Bitcoiners, lending in Bitcoin is a dirty word, because we've had trouble with lenders in the past. We've seen BlockFi blow up. We've seen Celsius blow up. The biggest of them all, who no one knew about, was Genesis. That blew up. And that basically lent a whole host of money, which probably caused that Celsius meltdown. Lending isn't a dirty word, and it's not a bad thing necessarily. It can be, but it's all about knowing your own limits with it. And this is where, as the Bitcoin market matures and financializes or Bitcoinizes traditional finance, there are going to be more and more lending options available. And this is, to me, a very good thing. It shows a sign of Bitcoin maturing, that traditional financial institutions want to lend on it. We've seen an announcement by Hester Peirce that she said banks can now custody it. Well, once they can custody it and they don't have that problem with the SAB 121, with the capital requirements that's required to actually hold Bitcoin on the balance sheet, they can now start creating lending products and savings products, which are going to be really beneficial. And the beauty of lending on your Bitcoin means that you don't have to sell. So you don't apply sell pressure to the market. Now, depending on which lender you go to, some lenders will literally sell your Bitcoin to the market and then they'll make good on it and buy it back. But a lot of lenders won't do that. So there's no sell pressure. So all of a sudden what you're doing is...
Hold on 1 second. If you are holding your Bitcoin on an exchange still, or sharing your keys and your KYC information with a third party, everything you're learning about right now is completely moot. This is your wake-up call. You are only self-sovereign if you alone hold the keys to your wealth. Bitcoin's the first and only asset in human history where humans can actually custody entirely their asset. Custody sounds daunting at first, and believe me, it was for me 10 years ago, and I missed a year or two of massive gains, and I don't want that to be you. It's exactly why you need to talk to my friends, Tony Asback and the Bitcoin Way. His team will train you to do it right the first time. We just interviewed Tony the other day, has 50,000 views, an unbelievable response. People love him and his story and what he has to share and his mission. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. So quit sitting on your hands like I did a decade ago and get started today. Again, that's thebitcoinway.com/Brandon. Now back to the show.
You're getting pent-up demand for Bitcoin without any sell pressure. And this is where, if you look at all the pieces on the chessboard that are coming to fruition right now, you've got the Bitcoin treasury companies, the liquidity sinks that'll never sell their Bitcoin. You've got all these lending products popping up that enable you to live off your Bitcoin forever without having to sell your Bitcoin. All of a sudden, we're approaching that asymptotic top that is 21 million and the absolute digital scarcity that it is. And more Bitcoin is getting dispersed into people who are not willing or able to sell their Bitcoin, whether it's treasury companies, long-term hodlers, you name it. And this is where that creates the drive and the demand, and the price is determined at the margin, which is really going to push the price up dramatically. And so these lending products that I'm seeing in the marketplace come to fruition are wonderful. Mallers with his offer of creating a loan product with an interest rates that's single digit, which is huge. You've got all of the traditional Bitcoin lenders in the space as well, and we've looked to, I guess, try and create a loan product which is going to be really beneficial for those long-term hodlers wanting to capitalize on the gains that they've got without having any tax consequences to it, and at the same time being able to take advantage of maybe a faster horse in the race at this point in time in the Bitcoin treasury companies, because I think over the short term, those Bitcoin treasury companies will outperform Bitcoin. But I look at this as probably the biggest opportunity I've seen in the 10 years that I've been in Bitcoin as a way to get Bitcoin yield by investing in these companies. Now, is it a long-term sink for your Bitcoin? Personally, no. I don't think there's a better investment than Bitcoin, but if you want to take a small portion of your stack and try and outperform Bitcoin by buying these treasury companies, I think over the short term, that's a reasonable thing that is achievable.
Yeah, and I love that nuance too, and that it's so important. And there's so many good Bitcoiners in the space, and it's all the same ethos, right? Where it's like, hey, we're all human. We all have a little degen in us, and they're becoming good ways to accrue more Bitcoin, which is not like, it's not alt season. It's not some scam stock in the stock markets or whatever it is. It's like, hey, if you need to scratch that itch a little bit, none of us are condoning it, but if you need to, you might as well try to get a little more Bitcoin. It's like having a little bit and try to get a little more of the good stuff, So if you need to scratch that itch, not everyone does, but I know some do. So I love that nuance to it. Do you think we're going to see FOMO from retail again? It feels like 2017 was like that peak, and like we had it in 2020, 2021, obviously a bit, not quite as much as 2017. And then, again, like we just feels like, it's just like everyone's like, like kind of bored with it, that type of thing. Like where is retail at? Like what are they doing? Is it just going to be the 3% of people convert the king, these big liquidity pools kind of dragging the rest of society to Bitcoin and to this protocol, this new money transition we're in, or is retail ever going to show up again?
I love that. I love that question. Where's retail? It feels like that, right? Like there's no FOMO, there's no interest. You look at the Google indicator, you can't find anyone looking at Bitcoin. No. It's like, what is this even
one's got
happening?
A pulse. Right.
No one.
Breaking all-time highs.
And I can tell you, as someone who's at the coalface talking about this, funny sort of thing. I had a conversation with a client, and we're 10 minutes into the conversation. We're maybe 2 to 3% away from an all-time high. We didn't even talk about the Bitcoin price. That's how boring it was. It was like, This doesn't make any sense. But what this really shows me is that Bitcoin's really growing up. Retail money used to throw this market around dramatically, and now retail money doesn't really matter. In the same way that the block reward halving really threw around the supply-demand curve dynamics of Bitcoin, it doesn't throw it around like it used to. And so I look at this and think Bitcoin's basically growing up, it's institutionalizing, and now those larger pool of capital are coming to the market. And I look at this and think Bitcoin is basically the pool of capital that is accessing Bitcoin is like an upside down pyramid. At the moment, when we first started looking at it, it was retail, it was mums and dads, it was kids in their basement, kids trying to buy drugs on Silk Road, and hardcore libertarians. Then we went up to the next stage. Some retail investors, mums and dads, younger investors, forward-thinking people looked at Bitcoin and thought, I want to buy some of that. And then it's grown up to the next capital stack. We've passed the family office. Family offices have either bought it or not. We've now moved into institutional adoption. The next is to get nation-state sovereign adoption. That's an unlimited pool of capital that can filter down into that tiny little microscope of available Bitcoin that's available right now. So I look at this and think, we've just moved to a different time in the cycle. Will we get retail back, which will push it at the margin? Maybe, but we've just got so much buying on a daily basis from all of these treasury companies and dollar cost averages. You now have ETFs as well. So I look at that and think, not that it's over for retail to sort of really put it into a blow off top, but I think it's less likely.
Could you put it into perspective, I guess, just for the average person of because I know there's a lot of people that are concerned about that. And so I'd love for you to touch on diminishing returns, like and you talk about this a fair amount. It's like, where does diminishing returns marry itself to perfect scarcity of Bitcoin? And you just alluded to this earlier of like hitting it and it's going to go vertical. where does that come into play? Because I know there's a lot of people that really get not upset, but I mean they're really just stuck on the where's retail, and that's partly why I asked the question, because you hear it a lot, like where's retail, where is the average person? And I know, and part of it's the ethos of Bitcoiners worried about people and just maybe the real actual altruism, not a fake, Sam Altman altruism, or sorry, what's his name, Sam Bankman-Fried altruism, like actual altruism of like, we care about people, we want the pleb to be in Bitcoin first before the companies are in. We had 10, 15 years of that happening and everyone could have got in. And now we've got companies here, we've got nation states, we've got these treasuries. So where are you on this spectrum, I guess, of diminishing returns and again, this, the perfect scarcity and it going vertical? Because a lot of what I hear from not just you, but from a lot of the people that are in the know, Checkmate, and just talked to him recently, just you're seeing this, like, yeah, retail's not around, like these are the big pools. And again, at the end of the day, it feels like the big pools of liquidity are going to be the ones, the powerful, the leaders of society, like it or love it, doesn't matter. They're the ones that are going to be converting a lot of the next system, it feels like, to Bitcoin, whether we like it or not. And they're here. So, it's a long roundabout way of saying, like, where do you stand on the actual diminishing returns of, and giving credence to it? Because we just mentioned a minute ago, but there's a fine line there. And I think people have to understand that and not, care about the average person, but also realize that retail is not going to be the thing driving this. We're only at 2 trillion. It's what, 0.2 or 0.1% of the global assets or whatever it's at right now. And we have a long way to go, but how does it do that? I guess maybe, like, how does it do that if retail, if they're not moving the market anymore?
I think it does it with difficulty. In hindsight, it'll look really easy and it'll look like a no-brainer. But, and this is where, say, I just want to give a shout out to one of my favorite Bitcoiners, Checkmate, who I love and adore, does the best analytical work in the space. And this is probably the only thing we disagree on. But I think, and correct me if I'm wrong, Check would say that, hey, we're never going vertical. It's never going to happen. It's going to be a bump and grind. And I think, we're leveling up and we'll just grind our way through to $1 million and literally dry our eyes with $100 bills. Yeah, he's the best. And just a quick shout out. If you haven't subscribed to his work, just subscribe, pay the money, whatever it is. Yes. He is the best in the market. And I think this is where I agree wholeheartedly, full-throatedly with him that that is going to happen until it doesn't. And so he will be right 99 times out of 100. And then we will have that one instance where it just gaps up and we wake up with, a God candle, a mega candle, whatever Samson talks about. And I'm much more on although I understand and agree with checkmating, because that is the sensible, responsible, the most likely thing to happen at some point in time. And this is a duration problem. He might be looking at that over, say, a 2 to 5 year window. But I'm looking at this over the next 10 to 20, 30 years. So maybe we've got a duration problem in assessing that. But I think absolutely, when absolute digital scarcity meets an infinite demand, there is only one thing that can happen. It will gap up to whatever level it has to fill that order. And this is where, with the Bitcoin treasury companies, I think Saylor will end up at probably 2 million Bitcoin. I think Metaplanet could end up at 1 to 1.5, maybe even close to 2 million. Then you're going to have copycats. They'll be filling their boots. They might, the Bitcoin treasury companies could literally end up holding nearly, half of Bitcoin available at the moment. That doesn't leave a lot of Bitcoin for everyone else. So what does the price have to be when we've actually transferred all of that Bitcoin to, diamond hands that are never going to sell? All of a sudden, we need to have that suddenly moment where, you had Parker Lewis on, another great Bitcoiner, that gradually then suddenly, I think a lot of that work he talks about is, a lot of the work you do in understanding Bitcoin is gradually, you put all of these pieces together and then suddenly it just all clicks together. And I look at that and think, much the same way that the knowledge is collected that way, the price of Bitcoin is going to ambient along, much like Check talks about. And then when it all clicks, a central banker who has their finger on the button and they press it till it bleeds is going to buy all the Bitcoin and set a new price of whatever needs to be done to capture any available Bitcoin on the market at that point in time.
Do you? Yeah. I mean, and I agree, and it's funny because like I and Check's an engineer, right? So like, and I was laughing. I was like, well, you're an engineer, like you're based in reality, so like you have to. But it's like, and I was saying to him, Bitcoiners are like that, and he brought it up, the Steve Jobs quote of the weird ones, like Bitcoiners are that, the INTJs, right? Like we are that small subset of society that's like, we're grabbing the muskets, the 3% from the Revolutionary War, and we're like, yeah, we're going, boys. Like, I know no one else is with us, but we're going, and we're taking this hill, and I'm going to die on this hill. Like, that is Bitcoiners, and that's that small and intransigent minority. Throughout history has shown, yeah, they do a lot of damage, and they really change history. They change society. I think that's the thing that you can't account for that in engineering speak. You can't account for that in in a model. And he says too, he's like, I mean, I hope my models break, like I think they probably do at some point. So he acknowledges it too, right? It's like this back and forth, but it's like Bitcoiners have to balance ourselves between pragmatism and being in the real world, because that's where we are at this second, but also pushing the envelope and saying, hey, this is where we're going. This is what's going to happen. Because money is psychological at the end of the day. It's a psychological engine. And that's what all of this is. And that's why it's an information battle. It's absolutely wild. And then part of it, I guess, too, I'd love your thoughts on any of this, is it doesn't account for black swans, right? So you have all these things going on, but like, look at all the black swans the last 20 years alone, last 5 years. It doesn't account for those things happening at a Trudeau locking everyone in their homes or whatever. So is that kind of what you're alluding to, in a sense of like, it's going to go vertical, is like, there's unforeseen things? Is that kind of what you're saying, where it's like, hey, these things are going to happen, and it's just going to go boom, and you're not going to know what happened, basically?
I think so too. And this is where, we have these black swan events that are 1 in 100 year events that happen every 5 years. So the black swan events are completely, they're completely mispriced. And so I look at that and think, and this is where I've been really fortunate to spend a little bit of time with David Dredge, who is the world's best risk mitigator. I urge you to read as much as you can, look at his work. He runs a fund, Convex Strategies. He is the best in the world of this. He basically has the practical application of what Nassim Taleb and Nira Rabini talk about in The Black Swan and their works. And I look at this and I think, just from an education point of view, or just on the balance of probabilities, if the US or the Australian government appointed me to be head of the Treasury in either or nation, I would literally press that button so hard to buy Bitcoin, it would all be gone in the space of 24 to 48 hours. And guess what? I wouldn't care what the price is. And I know that there's going to be someone appointed over the next 25 to 30 years who's going to feel the same way that I do. And they're going to look at that as a matter of national interest. They're probably going to be influenced by Jason Lowery and say, we need to do this to secure the future of America or Australia or whatever country you want to do it, but you want to make sure you do it before your enemies do it. And I look at this and think, once the cat's out of the bag, you've got basically less than 24 hours to secure whatever bag you've got. And I look at, probably one of the greatest movies to explain or kind of conceptualize what happens here is the movie Margin Call with Simon Baker and a number of other great actors. The one escapes me, but he talks you through what that trade looks like, where they have to sell all of the bonds and they're not going to be buying any bonds. So they're going to start at 10 o'clock and by 12 o'clock, they need to be rid of 60 or 50 to 60% of their book, because everyone's going to cotton onto the market what's happening. So you're not going to have any counterparties by the very next day, because no one's going to want to play with you because you sold them out. You basically sold them all the shit in the bonds. And in the same way, all of these central bankers are playing the exact same game, except it's about buying Bitcoin, not selling bonds. But it's fundamentally one and the same game. So whoever goes first wins and survives. And that beautiful speech about, that Jeremy Irons gives in the movie Margin Call, where he talks about, gentlemen, my job is to know when the music stopped. The music stopped. And that's the time to sell. And in the same way, you're going to have a central banker realize the music stopped and the time to buy Bitcoin is now. And they are literally just going to put national interests ahead of their job, themselves, and they're just going to buy Bitcoin, and that's going to gap up. And, we'll probably have a chat. You'll give me a call or I'll call you when I wake up and go, does this look right on the screen? Is this the real number? Is this what we're working with? Is the base rate now? And this is what happens when absolute digital scarcity meets unlimited demand.
the reason I couldn't agree more. And like I said, I what Check does, I love it. Same thing you said, and I tend to fall on your side of the aisle with that. And the reason I brought up black swans too is because we mentioned like kind redemption. I would love for you to unpack a little bit of the importance of the like kind redemption. Hopefully, those really starting to come to fruition of people that are in the legacy system, and then this being married to people eventually being able to take custody of their Bitcoin as well, and just some of the importance of this, and just any your thoughts on some of this, because again, the black swans, it's all, and again, and Check said this too, actually. I mean, it's like it's all fine until it's not, right? And that's the thing that, if anything, we've been taught over the last 20 years, especially the last handful, but it's these things can and will happen. Just because you live in a G20 country or something doesn't mean, we're still humans at the end of the day. And I think that there's so many people, Gladstein wrote his Check Your Financial Privilege book, and, really aimed at the Western world, obviously. And there's so many people around the world that are living without a bank account or whatever it is. And that's what Bitcoin solves, all these problems. And, you're protected from black swans, for crying out loud, if you have custody of your Bitcoin. So I'd love for you to touch on, the importance of like kind redemption, and that coming to fruition, hopefully here in the not too distant future.
When you say like kind redemption, you're talking about the like kind redemption from the ETFs.
Yeah. Yes. Sorry.
Yeah. This is where I think we actually have, in Australia, we have the first in-kind redemption available. So give a shout out to Jeff Yu, who's gone through an enormous amount of legal work to create a structure that allows you to do that. I hope I get this ticker right. It's IBTC from memory. And that allows you to literally put cash in and then redeem in kind, which is basically get your Bitcoin paid out to yourself and self-custody. To me, this is going to be one of the most important innovations that is going to come to the financial markets. It's here in Australia as we see it, but it's not in the US, and really everything revolves around the US. I'm not sure they really want to do that, to tell you the truth, because what they're really trying to do is put a gated community around their Bitcoin. And to do that would basically leave the gate open for in-kind redemptions to come in and out. And quite frankly, I don't think they really want to do that. I personally would love to see it, because part of the mission of the Bitcoin Advisor is to get every single Bitcoin off exchange and into self-custody. Mm-hmm. And although we're doing a really great job of doing that, we're a long way from having every Bitcoin self-custody. So I would love to see that happen. But this in-kind redemption, I'm not sure if they're really, they're going to want to do that. I look at it, it's something that the SEC is like, oh yeah, we're really fighting for it. But it's like, are they? They're really driven by what Larry Fink wants. And I don't think he wants a hole in his bucket that is going to drain Bitcoins out of his ETF. So I would love to see it, but I don't think we're going to get it anytime soon. And I think what we're going to have more likely is a whole host of financial products revolving around those ETFs. That means you get to borrow on it. You get to do all of those things that you do in self-custody, but you don't actually get to hold those Bitcoin.
Fascinating. It's going to be absolutely fascinating to see. Speaking of that, to a degree here, tangentially related, what do you want to see in a Bitcoin bill? I mean, it feels like people around the world are kind of waiting to see what America does to a large extent, and then people start kind of talking about what they're going to do afterward. So here in America, what would you like to see a Bitcoin bill look like? And obviously Loomis and a bunch of them are working on trying to get stuff passed, accumulation, whether it's protecting self-custody, stuff like that. But what would capital gains exemptions, what would you like to see if you were crafting the bill yourself?
Good question. I'm not sure if this is going to be something that's captured by the bill, or it's possible to. I'll just say the obvious things first up, which is I would love it to preserve self-custody. I'd like that to be enshrined into the Bill of Rights, that we have the right to hold that. And I say that as a non-American, but I'd love that in your Bill of Rights to ensure that no government can impinge on that. I don't want to see a 6602 attack like what happened in the 1930s. I think that'd be absolutely devastating. I would love to see capital gains tax exemption. Obviously, that's a huge driver that would create a lot of liquidity in the market. I think that would create a lot of a lot of activity that would otherwise be frozen through time. So I think that would be extremely beneficial, mostly for the US, and downstream of that, we'd be a beneficiary. When it comes to policy, and this is probably more a policy statement rather than a Congress, an act that can be enshrined in the law, but I would love to see the financial regulators allow for or create a product which was effectively a mortgage on Bitcoin, which meant that if you had the ability to service a debt on the Bitcoin, that they would guarantee for a period of time that you would not have any capital loss on that Bitcoin if it fell. And so this is something really interesting that happened many moons ago in the residential lending space. So in all of our mortgages in Western world, we basically have a fixed rate. We have a mortgage, but when we take the mortgage out, the bank doesn't turn around 6 months later and say, hey, look, the loan's fallen, the property value's fallen 50%. We need to take that back, or you need to top it up. It's given that for the period of that contract, if you keep that loan agreement in good stead, i.e. meet your repayments on a monthly basis in good time, then the bank has no recourse to revalue your property and take that property from you if it's dropped below a certain threshold. I would like to see that instituted for Bitcoin. Now, if that happens in Bitcoin, what that does is that's going to democratize the purchase of Bitcoin. Rather than going out and getting a personal loan to buy a car, you could go out and literally get a personal loan. Say you could afford $1,000 a month. What that $1,000 a month would allow you to do is that would allow you to get exposure to nearly $200,000, maybe even $300,000 of Bitcoin. So you could go and purchase 3 Bitcoin. And the best part is as long as you custody it with that institution that they deem appropriate, and you meet the repayments on that, if that Bitcoin value drops below its par value, as long as you keep meeting the repayments on it and hold it for long enough, they won't give you a margin call on it. And I look at that and think, if you want to democratize Bitcoin, if you want to make sure the USA is the number one holder of Bitcoin globally, you create that product that allows you to put Bitcoin in every single person's hand. That's what I'd love to see.
I love that. And so speaking of, here we're talking, the Australia USA thing going on here within the politics and all of this. I believe, correct me if I'm wrong, unrealized gains is something you guys are having to deal with down there right now, correct? Is that
correct?
Yeah. So what now that was floated here in America as well. And what are the ways people can protect themselves from that? From my vantage point, it's basically getting into debt. And that's kind of where this lending, a lot of what we talked about, right? You could lend against all of your assets theoretically. And I believe that would be the way to do it, which is what a lot of the wealthy do anyway, right? So I would love you to kind of walk me through some of this. We talked about black swans, lending, kind of all encapsulating what we're talking about right here, which is governments are going bankrupt. The cities, states, nations, doesn't matter what it is, provinces, they're all going bankrupt because that's what fiat does to the system inherently. And we're at this end game. We're at this fourth turning with it. And now they're coming for every single way possible, whether it's estate taxes, death taxes, you're leaving the country and they're taxing you on your way out. That's whatever it might be, unrealized gains, just atrocious things going on. So in your mind, I would love for you to just kind of weigh in on this, what your thoughts are, and also how we might protect ourselves from this.
It's a really good point. This unrealized capital gains tax in Australia, I guess if I can still man the argument for it, they're saying that it only applies to your pension account for balances over $3 million. So want to be mindful that captures a very small number of Australians. They quote 80,000, but it's more like 500,000 people that it will capture out of a population of 25 million, so 0.2% or 2% of the population. The problem with this is that it's the thin edge of the wedge, I believe. And to me, having unrealized capital gains tax is a breach of the social contract that we have with the government. And the problem I see is that we, in good faith, apply our capital to this pension account to provide for our retirement. If you take a step back, you realize that the whole reason for this pension account that was basically brought to market in Australia, the US, UK, the world was to remove the pension liabilities from the government's balance sheet and put that onto the worker so that they actually pay for their own retirement. The last 30 years, I personally have contributed to that system with the knowledge that the government is going to keep the rules the same, because it's a captured market that I can't take anything out until I reach retirement age at 65 years of age. Now, because I invested in Bitcoin, I have been successful in that and achieved a level that they want to start taxing unrealized capital gains on that. And so to me, it sets a dangerous precedence, because you are taxing and you are punishing those people who have achieved the most successful outcomes. And when you break it down, show me the incentive, I'll show you the outcome. So what is the government telling me as someone who has achieved, basically escape velocity and ensuring that I will no longer be a burden on their balance sheet into my retirement? What they're telling me is, you've done too well. We're going to tax you. You're not allowed to have that money. We're going to use it and give it to poor people. And so the rest of the country looks at this and says, oh, great, they're going to pay me to do nothing, not incentivize me to outperform and achieve. So I look at this and think the incentive structure is all backwards, and it sets a very dangerous precedent, because although they're only doing it in the pension system, the next step is to attack family trusts. The next step after that, which they actually have left the door open for, is to start taxing unrealized capital gains on your home. So I look at this and think this is the thin edge of the wedge when it comes to governments who are broke, governments who are void of creating any productivity, governments who are broke, who need to tax productive members of our society. And the end result of this is that this is going to drive the productive out of that system and probably out of our country, because if you look at anywhere where this policy has been introduced around the world, it's had devastating effects on driving the wealthiest or the most productive out of the country, because they look at that and think, well, this is a prelude to socialism. And my biggest concern with this is that unrealized capital gains and the introduction of that is a all-out attack on undermining capitalism. And capitalism has basically brought, 500 to 1 billion people out of poverty across the globe in the last 30 years, maybe 2 billion people. I look at this and think, you're going to attack the very system that has been more successful at achieving human prosperity than anything else on earth. And they think it's a good idea to undermine and break that system. Sadly, we're going to see very quickly that is going to achieve a whole host of outcomes that are undesired. I call it the law of unintended consequence. And so they think they're going to raise, $2 to $10 billion with this tax. And sadly, it's going to end up like Iceland or Norway. I think they had a recent wealth tax that they put on, and they budgeted for getting $1 billion and maybe $2 billion. And it turns out that they were down $500 million on their previous year's income or taxes, because everyone said, jack it, we're not sticking around for this. We're out of here. And my big concern is that I've talked to a whole host of people who have come from South Africa, Zimbabwe, and those types of countries, and they moved from South Africa and Zimbabwe to Australia to get away from exactly what was happening here. And the terrifying thing is, they said, Pete, we saw this happening 30 years ago in our country, and we moved here to escape that. And now we're seeing the very same thing that has led to the demise of that country 30 years ago being introduced in Australia. And it makes me really sad, because there's only one thing that you can do if that happens, and that is, do what you have to.
It's incredible. It's scary. I mean, we're seeing it all over the place. I mean, we're seeing it everywhere around the world right now. It's a disease, and it's, I don't know. Maybe it's being curbed a little bit right now, or in the last year or two, whatever. I don't know, but I mean, just barely. I mean, it just in the margins, maybe. The brain drain is real, and I saw it here in Michigan, where I'm from. I mean, you had the auto industry is obviously the big three. The last 10, really for decades to a degree, but really the last 15 years, especially since the GFC, massive brain drain. But you saw people, when you let the city become destroyed, basically people just start moving out. They start expanding out other areas, and they start leaving, and they start, it's a real brain drain, and that people just unfortunately don't think at that level of what it does to your society. It really is an unbelievably sad dynamic. We talked about just fiat, just really kind of being inherently corrosive a few minutes ago, but do people need to really just get used to the inflationary world we're in now. Obviously, in the last couple of years, people have been really hearing about it a ton, but this is just going to speed up, is it not? I mean, I feel like we're at the exponential part of this debt curve where this is why Bitcoin, for all intents and purposes, is going to go parabolic, because the debt curve, the debt going up, I mean, to the United States government admission, Lynn Alden points this out all the time, right? Nothing stops this train. It's kind of where this started from in a way. She published that CBO report, a Congressional Budget Office, whatever it was, and it just goes parabolic over the next like 20 years. And that's the Bitcoin chart in essence. So are people going to have to get used to this world of just higher inflation? And is that truly where we're headed? And are people going to figure this thing out, or what?
I think that is where we're headed. I agree with Lynn. Nothing stops this train. So the only way to protect yourself, though, is to have a digitally scarce finite asset, which is Bitcoin. And nothing else can protect you from what's coming, I believe. I don't think property is going to solve it for you, because they're going to tax it from you, or they're going to rezone it. And, in Australia, we've got this insidious tax, much like the unrealized capital gains tax, but one of our state governments has created what's called a windfall gain tax. So what this tax is, if you've held property for 50, 60 years, like we've had a lot of Italian and Greek immigrants come out and buy on the outskirts of Melbourne, which is the Victorian national, the national capital, the capital of our state, Victoria. They've bought a whole host of farmland around it to create farmers markets and till the land. And they've held this for 60, 70 years, some of them. And we've had this urban creep that's come to their back door, and the government wants to rezone their farms from rural to residential. And that means an uptick of, double, triple, quadruple the value of their assets by rezoning it, literally a stroke of the pen on the government's behalf. And the government of Victoria, in their infinite socialist wisdom, has said, we're going to implement this windfall gains tax, that if we rezone your property from rural to residential, we're going to take 66% of the uptick in that value of that property.
Wow.
Yep.
Wow.
So if someone's got a $10 million property and they revalue it, rezone it, it's worth $110 million, they're going to take $66 million of that $100 million gain.
Jeez.
My question is, why am I greedy for wanting to keep my money?
That's incredible.
So I look at this and think, the unrealized capital gains tax, it's already here in Victoria and with a lot of these landowners. And we speak to a whole host of investors who are, it's made Victoria uninvestable, because if you've got to give away 66% of your gains on a rezoning of the property, then how do you make money? And this is why we have a housing affordability crisis in the country. And I look at this and I think, what's wonderful about Bitcoin? There's no windfall gain tax on that. There's no one telling you what you can and can't do with your Bitcoin. There's no authority to say, hey, pay us a land tax on our Bitcoin. It's free and open market. And this is where I think we're moving to. What you alluded to is some potentially very dark times. And the only way I see to protect yourself from that is to have exposure to Bitcoin and have as much as you can sleep with.
It's absolutely remarkable. And that's why Bitcoin is so incredibly important, because you put it in your head, your wealth is in your head, and you can walk to the next country that treats you better. Go where you're treated best. Wow, what a wild time. And it's important because that's happening all around the Western world. So people have to be aware of this, whether you know it or not. This is what's happening all around you. And so that's why this is so incredibly important. What was your, really quick before we go into just some price and where you see things headed and stuff like that, what made you click? We talked about this earlier, of gradually then suddenly, and eventually, like, you're doing your homework, and then it just clicks for you one day. What were those moments for you? And I like sharing this because, again, we have a lot of people that are maybe newer to Bitcoin, or they're learning Bitcoin that listen to the show. And I always share my couple things so people can, go look at it or whatever, but it was understanding self-custody. And to what we're saying right now, you don't own any of your assets at all. Maybe gold and silver you hold in your hand or something like that, but Bitcoin is the only thing where you can custody it, walk all over the earth, and hold the wealth in your head as well on top of that. And then seeing the log chart. So those couple things, custodying your asset, realizing you don't own your property, or, your real estate, you don't own stocks. So you custody your Bitcoin, seeing the log chart of it and holding the wealth in your head, and the log chart being for the person that's listening, that it stair steps up over time. It's a network effect. So it's not actually just like going up and down like this linear crazy price chart. It's people adopting this technology over time, this money over time, and you start seeing it just goes up and to the right. So what were the things for you that really your aha, where it finally clicked for you when as you were going along your studying path?
Oh, good question. I think there were so many things that just really needed to click, and I wish I had the panacea, the silver bullet to tell you, hey, this is what did it for me. But there are sort of multiple different facets to that question for me anyway in answering that. And I'll mention a couple of them. And what fundamentally happened was it just all the knowledge was there, and I understood all of these different facets. And then one night it literally just clicked. It set in place. And so for me, one of the big things was understanding that Bitcoin is something that can't be replicated. So I understood absolute digital scarcity, but I didn't believe it, because I thought, no, someone can create another network. Someone can create a new thing. There can be a new Bitcoin. There can be a MySpace to a Facebook to a MySpace. Technology's evolving, and, we're going to see that, Bitcoin fall victim to that. And then I understood that Bitcoin really is a trust machine, and it has the longest digital record of an immutable ledger, which has never changed. And I thought, wow, that to me is something that's actually really, really valuable. If you have a ledger that is immutable, that can't be changed, there is significant value to that. And sort of conclusions I drew from that were that in order for a cryptocurrency, a token, a coin, whatever you want to call Bitcoin, in order for a network to be better than Bitcoin, it needs to have a longer immutable record than Bitcoin. Now, Bitcoin's got a 16-year head start on the next available. So I look at this and think, as long as Bitcoin keeps working and doing its thing, then it has won the trust game. And we talked about earlier that, we've got a degradation of trust in our institutions, our financial institutions, our economic indicators, our numbers, everything that we rely on. So what is going to be really valuable long-term is something that you can completely trust. And this is the beauty of the Bitcoin network. I looked at that and went, wow, once I understood that you can't, Ethereum can't recreate what Bitcoin did. It is one of a kind. Once I went down that and realized that this is the only thing that you can rely on, all of a sudden I realized, well, everything else is a subset of that trust. And this is the most trustworthy thing that I can find. Once people understand that, they're going to apply a lot of their time, energy, and capital into this network versus anything else, because this is the most trustworthy thing that you can find. So there were multiple different things that sort of had to click, but that was probably one of the biggest things that for me was, oh, okay, this isn't replicable. You can't just recreate it. It is a one of one. There's only one invention of digital scarcity, absolute digital scarcity. And by the very definition, you can't recreate that.
What is the biggest thing that, or most concerning maybe, that you see in the space, or maybe something that people just aren't, privy to, or Bitcoiners aren't focused on? Because there can tend to be, obviously, a lot of Bitcoiners spend time on Twitter, and maybe Nostr and stuff like that. What are some areas that, and those areas can be filled with a fair amount of noise, as we know, Twitter, X, whatever. So what are things that you think are maybe concerning, that you see? Maybe there's nothing, but is there anything out there that is something where you're like, you know what, maybe we should be paying attention more to this, or this is not getting enough love? Or
I think probably the biggest concern I've got is this is probably coloured by being an Australian, where one of our national slogans is "She'll be right, mate," is the fear of apathy around the Bitcoin network, that we just stop caring about it. And if you stop caring about it, then that will fall into decay, and it will ultimately not be what it is today. So I think all of these spats and debates that we see about knots and running knots, and Luke Dasher and the core team basically at it, I'm like, this is great. Like, no, I don't like seeing people fighting, but it means you care. So if someone's fighting, they're interested. There's no apathy there when people are doing that. So more of that. I'm like, hey, this is really great.
Yeah, that's such a great point. Okay, I want to transition us to price and what you're thinking about this cycle, where your mental models go with this, Saylor's gold rush over the next 10 years, and where we are long term. Where are you and the kind of work from the end and work backwards? So where do you sit in the spectrum of, are you more along the lines of Jack Mallers, where Bitcoin's 1/2 of every transaction and the TAM, the total addressable market, is 450 trillion? Is it more of a Jeff Booth approach where it's 900 trillion? It's going to account for every single asset in the system. Is it above that? Is it below all that? Where do you kind of sit in this spectrum when you look out on the horizon?
Firstly, I love Jeff. So what I'm about to say, Jeff, I'm sorry. I think, I think all of us are being ultra conservative on where this goes. Michael Saylor talks about Bitcoin being 50% of every transaction. So by default, that would either put it somewhere between 450 trillion or 900 trillion, depending on how you want to structure that. But I'd actually go further and think that market is actually going to be significantly bigger than 900 trillion. Because what you really need to look at is not only will it make up 50% of every transaction, whoever is the largest holder of Bitcoin, you need to divide whatever the 50% of every transaction is by whoever is holding the largest percentage of Bitcoin. So if that's Michael Saylor at 5%, if it's 900 trillion, you need to divide 900 trillion by 5%, which would give you roughly $18 trillion market cap for Bitcoin. Now, why do you divide by whoever's holding the most amount of Bitcoin? Is because that means they could effectively use all of their Bitcoin to buy everything in the world. And that will obviously never happen. So by my, conservative figures, I think $18 trillion, assuming someone owns 5% of the total supply, Satoshi, I think that's a relatively conservative estimate. I think it'll be a lot higher because obviously people will value a future value of money into the Bitcoin that they hold, and they'd never get rid of all of their Bitcoin for a transaction. So I think that the low end of the spectrum starts at $18 trillion, whatever number that comes out to. I'm not sure, but I'm sure we could do that. But yeah, I think that would be, probably close to at least $1 billion a coin. And I think that's a fair estimate. Fair market value for me would be that. And this is the interesting thing that we've got at the moment is we've got a coin valued at $100,000 and you get to buy it at a 99.99% discount to what fair market value should be on Bitcoin. Yeah. If Warren Buffett understood Bitcoin, he would have sold all his Apple shares, all of his Berkshire shares, absolutely everything to go hand over fist into Bitcoin. He'd be the biggest Bitcoin treasury company if he understood it. He'd give Michael Saylor a run for his money. But it's a very difficult thing to understand because we're programmed not to understand it. But I think, $1 billion Bitcoin would be easily achievable. I think we'll see that in the next 15 to 20 years.
Is that in... So what is that? I'm going to try to do math. Is that like 1,000x from here or 10,000x, or is that, and is that in today's dollars as well? Like how do you look at all that?
Yeah, that'd be 1,000x from here in today's dollars. And I think that's absolutely achievable in a 20-year period. Like 10 years ago, we were telling people to buy Bitcoin and they've achieved a 150x return on their money in 10 years. Over the next 10 years, it's not unfeasible to think that they can get 100x return, and then another 10 years after that's another 10x return on that. So I think those numbers are absolutely achievable.
Do you, and we touched on this earlier a little bit, when do you see Bitcoin really achieving like escape velocity or escaping a fiat? Because I mean, like when does, somewhere in there, I feel like it goes no bid in the sense of like people won't take dollars for the Bitcoin anymore, like it's, it's like, I mean, I agree with you because Bitcoin, there's no fiat goes to zero. All fiat has gone to zero in the course of all human history. It's all gone to zero. So the inverse of that obviously is infinity for Bitcoin. Like at what point though, do you really perceivably see Bitcoin going to 1 billion and we still have fiat and people are like chumming along like, okay, yeah, this is great and all, and Bitcoin's at 1 billion? Or is it somewhere in there where maybe Bitcoin has $1 billion in purchasing power per Bitcoin, but it's just a Bitcoin standard at that point. So does that make sense? Like, do you think they're still riding parallel to each other in the sense of, hey, we still have fiat and we still have Bitcoin, but this is just the purchasing power of Bitcoin has increased so much? Or at some point in there, has fiat gone away and has it collapsed?
I actually think we see fiat for a lot longer than we would like to see.
Okay.
I think it'll be there for the next 50 years, 20, 30, 50 years. But what's a really interesting thought experiment is if you denominated all that value in today's dollars on what was mined today, you've got 450 Bitcoin being mined today, and you've got $7 trillion of global value that gets facilitated by that. So if you, what is it, 6.3? So if you divided 6.3 or $7 trillion by 450 coins, you're going to get a number that's bigger than $14 billion. So that's today's numbers. So I look at this and think, if you've got, and back to the points we were talking about, if you've got the liquidity sinks in all of these Bitcoin treasury companies that can't sell their Bitcoin because it undermines their reason for being, if they do.
If you're liking this interview, but you're just wondering, hey, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're going to love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. BTC-TC.com. You're going to absolutely love these things. Now back to the show.
Then those Bitcoins are lost forever. They may as well be lost because they can't be spent. If you've got all of these long-term hodlers using leverage, which doesn't sell the Bitcoin, all of a sudden we don't have any Bitcoin available. We will get to a point in time where that happens. And then what we have is, if we don't have fiat, we have, saying today, if fiat didn't exist, we have 450 coins produced today that need to facilitate the entire global transaction of $7 trillion. So very simply, you divide 7 trillion by 450 and you'll get to a number that's circa $14 billion a coin. That's what it looks like. They're just the numbers. Like, if you follow that to a logical conclusion, Bitcoin goes to infinity. And ironically, if you're focused on price going up, then you should be rooting for the extension and the survival of fiat, because nothing makes Bitcoin go up faster than the existence of our fiat system.
Yeah, that's so true. That's the trade everywhere right now, right? The Hugo Stennis trade, the Japan, yen carry trade, where you're arbitraging and borrowing against this depreciating currency and saving and buying that appreciating money, really. So yeah, that's, wow. It's just a wild time we are really about to enter. Where does people will come and they'll ask about, well, there's gonna be lost coins. You can't run a whole network. You can't run the whole world on Bitcoin. How do you see this? Because again, like we just said, like there's lost coins. There's people are gonna be losing their coins. People passing away and not passing them down. All this. So how do you view, or if you have clients or family, friends, or you're speaking at a conference and this comes up, how do you explain the importance of deflation and how that's going to benefit society going forward?
I think humans are very good at adapting, and we've adapted to an inflationary system, and we will adapt to a deflationary system. I think, look at one of the books behind you over your shoulder, written by Jeff, Price of Tomorrow. Mm-hmm. He does the best job in the world of explaining deflation and what's coming to the world. The fact that, probably a large portion of humans will have to be on some form of universal basic income, I think is coming for the world. And if you don't have Bitcoin, then, you'll basically be dictated to. But this is where Bitcoin is the most important thing, I think, behind food, water, oxygen. It should be, but the funny thing is there's 8 billion people who need this, but maybe 1 million people on Earth understand what the consequences are of not having it and actually believe that 8 billion people need it. And this is the fork in the road, that if you want to be a self-sovereign individual, if you want to have full control of your domain, if you want to insulate yourself from universal basic income, from robots, from AI, there's no better investment to make than Bitcoin and to self-custody that, because you have full control over all of your faculties, all of your outcomes.
There's only around 1.13 million Bitcoin left to mine over the until 2140. So it's just, what is it? Just over 5% of the supply left. I would love for you to touch on, in saying all this, because this is what makes me think of it. The deflationary aspect, capturing deflation, neutral money that captures deflation back to all of the people on that network. How important is it for people to, how should the average person be looking at their stacking goals? Again, most people are just like, hey, I got a few bucks here. Yeah, I'm looking to save long term. I'd love to increase my purchasing power. And we're at this digital gold rush, as Saylor calls it, this next 10 years of where in 10 years from now, 99% of the supply is gone. So we're at this inflection point. So I would love for you to extrapolate and just unpack like how important it is for someone to be stacking Bitcoin, stacking sats, and accruing and saving in this hard money.
Well, I think you raise a number of points, but the most important thing, and this is where sort of, from a really top-down approach, the fear of deflation should be offset by the fact that you now have money that is deflationary as well. So if you can spend less than you earn, you can always provide for your retirement or your outcomes that you need. And this is the really interesting thing. So if you had the choice between an inflationary system whereby not only did you have to work, you then had to invest that money and outperform the inflation rate and the currency debasement, would anyone really choose that versus a system that enables you to work once, and then if you save that and don't spend it, that money is going to appreciate in value? If we were just dropped on a planet tomorrow, no one on Earth is going to want to take, let's use the inflationary system that means we have to be on a hamster wheel for the rest of our life. No one on Earth is going to do that. It's always the deflationary money. And the greatest trick the devil ever told us was saying that inflation is a good thing. And we're trying to target a 2% inflation rate. To me, that's, you're robbing us slowly.
Absolutely incredible. Do you think that what's a good goal for someone? Like it's it used to be hundreds of Bitcoin, and then it was get to 10, and then it was American HODL 6.15, and then it was get to 1, and now it's now we're people at 0.1, 0.01, 0.001 Bitcoin, and like to this whole point, like it gets less and less and less because you need more and more fiat to get that Bitcoin, and to get that same 1 Bitcoin, there's more and more fiat. So that denomination gets smaller and smaller and smaller over time. But to your point, deflation, you hold deflationary or neutral money that captures deflation, so you are protected from that. So most people think they've missed the boat though. And that's why we have some of these alt seasons or these meme coins and NFTs. So, is it, 0.1 Bitcoin? Is it 0.001? Like, is it just stack stats as many as possible? Like when you talk to someone about it, when you're looking at it, how do you see that for the average person looking to, hey, I'm just trying to just to survive in the coming decades here and retire at some point?
I approach this 2 different ways. So if we're talking from an investment perspective, I look at, basically it looks like an umbrella. It's a convex curve. And, at the one end, you've got people with no money. At the other end, you've got people with lots of money. And in the middle, you've got middle class. If you have nothing, I would throw everything at it, because the fact is, if you have nothing, you have nowhere to go. There's no down from having nothing. If you have everything, you should throw in 90% of your net assets. But the wealthy won't really do that because they don't understand it. And if you're in the middle class, then you should allocate a portion that you can sleep at night with. So it looks like an upside down umbrella, the complete inverse to the Laffer curve on how we calculate what the maximum tax rate is. But I look at this and think, you just have to do your best. And my co-founder said something to me which has absolutely ruined my brain. He said, they say that whenever you first heard about Bitcoin, you square the block reward in that period, and that's how much Bitcoin you should aim for. And I'm thinking, that's 2,500 coins. When I first found out it was the 50 block reward, 50 Bitcoin block reward, I thought, oh my goodness, that really has just upset me, because that's never ever happening. And so I think, to the point of, how much Bitcoin, should you get, you should just do your best. And this is where Bitcoin allows you to do your very best. And as long as you spend less than you earn, you're going to get to a point where you're comfortable if you save in Bitcoin. And the same can't be said if you save in fiat.
Yeah, and we were talking, I can't remember if it was earlier or if it was offline, that it was a forever stack, and in this concept of a fraction of a Bitcoin is going to be worth to everything you just alluded to. The purchasing power is going to be worth so much, it'll blow your mind. So having that forever stack and building that savings, it's funny because we were all taught for so long to save money. I mean, it's like kind of the ethos of so many people, to save, and we just didn't have money for so long that could do that, and actually was married to that actual ethos. And now we actually do have that. So people don't have to change their habit necessarily. They just need to change in what they're saving. So, or what they're saving in. So, and they're the perfect trade for your time and energy, your finite time and energy for a finite money. So it's pretty phenomenal that we actually have that now. Where do you see this? Actually, I want to get back to, before we do that, I wanted to get back to, so we talked about your long-term, the TAM, kind of where you see things going forward, and the big numbers, but I want to now back it down to the 10-year target, and kind of where you're thinking of things. Is that the $1 billion, is that 10 years? And if it is, which I might have been earlier, I believe, where do you see it over the next, cycle or so? And you can even back it down to, where do you see it, just a cycle the next year or so? I know many people are expecting a bull run right now, and we're just kind of entering this phase. Where do you see things in the coming years leading up to this 10 years and maybe, the $1 billion, like you mentioned earlier?
I think over the next sort of 5 to 10 years, we could see $10 million a coin. That seems perfectly reasonable to me. That's, we've got institutional money here. We've got liquidity sinks taking Bitcoin off the market, never to come on board. And you've got institutional support for that. Saylor buying billions of dollars a week in Bitcoin. I think it's perfectly reasonable to think that we get 100x from here. And I know people look at diminishing returns and think, oh no, it's diminishing return cycle. It's like, diminishing returns is only possible if you can't print infinite amount of fiat. So the whole diminishing returns thing, I think, is not a real construct if you look at the fact that we've built on and this is probably my only criticism with the power law, is that the power law is premised on the fact that fiat doesn't change, but it gets debased to the tune of 9% every year or 10% every year. So how can you have a long-term power law that doesn't really account for that? And I look at that and think, for that reason, the power law is a wonderful tool, and I love Giovanni, and I think what he's given to the Bitcoin community is excellent, because it's brought a talking point that has invigorated a great deal of conversation. But long-term, you can't have that, and this is where the law of diminishing returns, I think, will be broken to the upside, where it just kicks away. And we had 100x return, or maybe 150x return in the last 10 years. It's perfectly reasonable to think we get 100x return in the next 10 years, but now we have these liquidity sinks that are taking Bitcoin off the market forever, and they can't sell it because it undermines their entire reason for being their business model if they do. So I think at some point in time, we reach that inflection point. And Wicked Smart had one of my favorite charts of all time, where he showed the asymptotic curve slowing down and the decaying returns of Bitcoin, and then it reaches an inflection point where it literally just goes up forever. And I think we're approaching that. It's much closer than we think. I think we'll see that in less than 10 years, probably more like 5.
Do you think that there is any, I mean, we talked about black swans earlier, stuff like that. Is there anything that you foresee that could stop that, I guess, or not have that happening? I mean, everyone says, Bitcoin, is inevitable. We talked about earlier too, right? Of like people apathy. and Saylor's talked about this, of people being apathetic. And that to him is the biggest detriment to Bitcoin not reaching its full potential or whatever. Is, yeah, it could run for thousands of years, but if no one's interested in sound money, no one's interested in Bitcoin, then yeah, we won't use it and we won't benefit from it, but it might be running in the corner by itself over there, the technology, the protocol. So, but maybe besides that, is there anything that you foresee, people just forgetting about Bitcoin and being apathetic? Is there anything that you think stops that train?
Yeah, if you can solve for human greed and fear, then yeah, Bitcoin won't do it. But guess what? You can't. So there's no chance that happens.
Fair enough. Oh man, that's fair enough. Do you think we have a super cycle at some point, like in there somewhere? Do you think we still have normal cycles? Do you think it goes, we're at crazy purchasing power of one Bitcoin eventually, and then it comes down again? Like, how do you see the cycles playing out going forward?
I think we're probably, to British HODL and checkmate, I think we've got basically a bump and grind cycle where it bumps, grinds, bump, grind, and it'll bore us to death with this sort of 50% return per annum. And, that can do that for the next 10 years easily before we get to the point where we actually have a supply crunch. And I think that to me is the really interesting thing. We're going to see levels and expectations completely change. Sadly, I think this block reward period and the liquidity that's instituted by this liquidity cycle, I think that has changed. I don't think it's going to be a 4-year cycle like we have. We could have a prolonged forever cycle in some capacity because we now have pools of capital that are infinite. We're approaching sovereign state level where they have money printers where they can literally print whatever they need. So by that very definition, this can go on forever until that money printer stops or we get rid of fiat completely, to the point you made earlier. Like, how long does this thing go on for? Well, as long as fiat sticks around, Bitcoin could go up.
It's wild. And is that where that supply crunch, does a lot of it kind of go around just coins not being on exchanges, or just there's not the 99% of it's mined already, like 10 years from now? Is that why a lot of it comes to a head, you believe, in about 10 years or so? And Saylor's prediction, all this, is that where we really, in your mind, see that supply crunch hit because of that?
I just think if people let Saylor run for the next 10 years at the rate he's going, he'll have 20 million coins. So it's going to happen one way or another.
Oh man, that's so true. Do you think that mining leads price, or like hash rate leads price, or do you think that the price leads hash rate?
Oof. Good question. I think that in the past, hash rate has led price. I think that's a fair assumption. And one of the friends, probably a mutual friend of ours, CJ, I think he's done the best work on that with his work. And not to admonish any of that, I think there's a possibility that price will actually lead Bitcoin mining. Actually, no, I'll take that back. I think hash rate will always lead price, because we're entering a phase now where Bitcoin is going to become a critical piece of infrastructure, and people will mine Bitcoin even if it is at the detriment or cost to the nation to do so. So I think we're getting to a period where it's now a critical piece of infrastructure, much like other pieces of infrastructure that run at a loss. The government will subsidize that in some way, shape or form to ensure that they've got access to the network and they can put on whatever transactions that they want onto the network through their mining facilities.
I don't think we talked about just this. I guess, the next 6 months, 12 months, your price.
I think we'll see somewhere between a 3 to a 10x from price from here. So that means we'll see somewhere circa $250 to $1 million a coin over the next 18 months. I don't think that's unreasonable to think. I think all of these liquidity, these Bitcoin treasury companies that are opening up and buying Bitcoin, they're buying it domestically, they're buying it globally, internationally, and we haven't even got to the sovereign nations yet. And I think this cycle will see sovereign nations dip their toe in the water with it. And once that happens, all bets are off. So it could be anything.
Yeah, I couldn't agree more. Do you think that we see this cycle? It's a little bit of a tangent off of this as we land the plane here. Do you think we see this cycle, or maybe is it next cycle, where we start seeing Bitcoiners buying? I was always thinking of like sports teams or like stuff like that, but at some point you made me think earlier of like, man, Bitcoiners are going to be buying in the next cycle or two, it feels like other companies up, right? Like they're going to be buying other public companies. They're going to be buying other Bitcoin treasury companies. I mean, Bitcoin treasury companies, maybe not, just because they will hopefully be doing good themselves, or doing well, I should say. But we're going to start seeing, I feel like this, not cannibalizing, but we're going to see the Bitcoiners, I feel like, starting to eat up these different, verticals in the world, these different silos of businesses. Like, have you given any thought to that, of just like that playing out over time here, of like the Bitcoiners' wealth is obviously going to be accruing so much and so rapidly over like the next decade, that we're going to start seeing Bitcoiners starting to eat up the legacy asset world, really?
I think that absolutely happens. And I think we're going to see these zombie companies that should be dead. If they don't adopt a Bitcoin standard or turn into a Bitcoin treasury company, they will cease to exist. And then I guess the question will be is there going to be a wealthy Bitcoiner who wants to be a benevolent provider of liquidity and support to that company that would otherwise go the way of the dodo? And I think you'll find that Bitcoiners have a very diverse range of, I guess, passions and interests, and each to their own. But there'll be a time when, wealthy Bitcoiners will support with absolute fervor the companies that they really love and support. And I look at, say, one of the companies that I loved growing up was Burn Surfboards and Almeric. And if they were ever in a position where they needed funding to keep going, and I was in a position to provide it, just to ensure that that brand lived on and gave me that feeling or sense of, that childhood romance of loving that product, then hey, that's something I might support at a future point in time. So I think, the beauty of this is that it gives Bitcoiners optionality, and everything's coming to Bitcoin. It's just a matter of waiting for it.
Yeah, so well said. Do you think that central banks are, obviously there's the gold flows are crazy right now. I would love just some of your quick thoughts on just the flows of the metals, I guess, with the central banks, but also what we're potentially seeing with them getting into Bitcoin at some point. Obviously, the Czech, I don't know if it was Czechia or Slovakia, I can't remember now. But talking about it, obviously there's been the Putin, Xi rumblings, just stuff like that. What do you see on the horizon for that? Like, is that in any of your mental models of like, yeah, I mean, that's kind of like all bets are off at that point when, like how do you see that?
None of this is in my mental model. Like, my care about, countries accruing gold. It's like, it's like me trying to accrue dinosaur bones. Who cares? The world, these treasuries will figure out that it's not a big deal. And, accruing gold, although it might, suffice a short-term need of security and, hey, we're doing great, that's not the end game. The end game is Bitcoin. And all these treasuries, both national, corporate, sovereign, will figure this out at some point in time. And whoever figures it out first and starts stacking Bitcoin the hardest will win.
Yeah, no, and that's kind of where I was going with this. So I'm glad you took that there. Like, I feel like it's going to be very, at some point sooner than later, it's going to be them switching over to, oh no, now we're getting front run. The central banks will switch from precious metals to Bitcoin. And I just feel like that happens sooner than later. So, what about you and what you're working on now with the Bitcoin Advisor? We'd love for you to touch on just, some of the stuff you guys are working on, what you guys are excited about right now, as we wrap here.
Probably the two biggest things I think I'm excited about is we're seeing a much older cohort of clients come to the Bitcoin Advisor with significant amount of assets. So we've got a whole host of baby boomer clients who want to get into this space. They're concerned about passing down a legacy. They've got children. They don't have technical expertise to self-custody it, or they're concerned about self-custodying millions of dollars of Bitcoin. Literally, we help clients weekly with that concern, which I absolutely love. And it's great getting an insight into how our clients are thinking, who have got vast amounts of wealth. They've got traditional assets. They've got usually a lot of property, less so shares. Most of their wealth's tied up in property. And we're having active conversations around how they're going to go about selling that property to then go and buy Bitcoin and put those property proceeds into Bitcoin. And I look at this and think, that is such a significant shift from where we were maybe 12 to 24 months ago. And I think they look at this and realize the property markets across the Western globe are cooked. they're looking at their kids who might be my age, and they're sitting in, multi-million-dollar properties thinking, I know what my kids earn. I know how much they've got saved. And I know for a fact they can't afford to buy my property from me. Even if they pulled all of their resources, they couldn't buy it. So I think a lot of these clients who are sort of, at retirement age are looking at this thinking, this isn't sustainable. We want to be out of this asset as soon as possible. And we want to be in the asset where all of the young people are wanting to put their money. So that's one thing that's hugely positive. And for me, a product that we're about to launch, or we have launched a soft launch on, is the Loan My Coins product, which I think will revolutionize lending in Bitcoin. It's a Bitcoin to Bitcoin loan. It comes with no counterparty risk, no margin call, a 5% interest rate, and a 95% lend. And to all you hardcore Bitcoiners out there who say, that's not possible, that sounds too good to be true, I assure you it is true. And I'd say learn more about it, because it will completely revolutionize Bitcoin in lending. And that's something I'm really proud of. It's a product that I've used myself personally, and I think it will change the face, particularly for Bitcoiners who have been around for a long period of time. I think it's going to provide optionality that they will really love. And most importantly, I'm serious when I say this, and we had a chat offline about it, but it is a product that has no counterparty risk and no margin call, and it allows you to borrow 95% on your Bitcoin. That's the killer app in Bitcoin, I think. So I'm excited to see how that gets taken from the Bitcoiners across the globe.
It's incredible stuff. Where can people find you, and any last parting shots, any parting thoughts?
Parting shots. I'd say none of us have enough Bitcoin, particularly with what's coming. So I'm frantically still trying to get more Bitcoin. And I just look at this and think, out of all the assets I see in the world today, it's still the only asset I want to own long term. If I can say, just do whatever you can, either learn more or sell some assets to buy more. For me personally, that's what I'm trying to do: accumulate as much Bitcoin as possible, because I see what's coming down the road. And where to find me? You can find me at thebitcoinadvisor.com, and that's advisor with an ER. Alternatively, you can find me at Peter BTC Advisor on Twitter or X. So any questions, please reach out. I'd love to catch up with you all.
Mr. Peter Dunworth, an absolute pleasure. Thank you for being a playable character in a sea of non-playable characters. Thank you, sir.
Thank you, Matt. Such a pleasure to be with you.
If you can't get enough of these interviews and you want to deepen your education on sound money, wealth building, and freedom, you're not going to want to miss this playlist here. Happy binging. Check it out now. We'll see you inside.